Hi, everyone, and welcome back to another show. My name is Tyler, and I'm here with Matt, the founder of ORATS. ORATS is an options analytics platform built on top of over 15 years of historical options data. Our dashboard is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them through to your Tradier brokerage account. Today on the show, we're going to discuss both the stock scanner and the option scanner in the new dashboard. Matt, do you want to get us started by sharing your screen?
Yeah, definitely. Thanks, Tyler. We're coming up on earnings season, so I want to start with an earnings-related scan, and we've gotten quite a few questions on this, so I think it's a good opportunity to talk about one question we get: how do I scan all stocks to find opportunities? And the other is, how do I set up a double calendar, a double diagonal to find good earnings trades? So I'm going to try to answer both of those questions. And Tyler, if you have any more, we'll answer those then.
Cool.
So yeah, the option scanner is not designed to scan every single stock at the same time, nor likely does the client want to trade every single stock. If an opportunity were to come up and you click on it, the client would probably say, oh, it's not liquid enough, I don't want to trade it, or oh, it's a stock or some type of an ETF or index that they don't want to trade. So the first thing that you should ask when you're trading and looking for opportunities and scanning, the first thing is, what kind of a stock or ETF or index do I want to trade? Liquid, non-liquid, large, small, high stock price, low stock price, volatility, high, low, earnings coming up, index or not. I mean, there's millions of questions. You can't, finding opportunities in all of those is kind of a fool's errand, because they're not comparable in many ways. So is that intro okay there, Tyler?
Yeah, I mean, it sort of gives us the reason why we made the stock scanner in the first place, right? I mean, ORATS, we're a very options-focused company, but we needed a way to filter through all these symbols, and this is the way.
Right. So I think one of the first things to do is, when you come into the now this is our new beta, so when a lot of people are seeing this, this will already be the new ORATS dashboard look. We've moved basically the tabs to the top, everything else is there. And we try to make it easier. We have live use cases and we've added that, but the scan and stock scanners are pretty similar. So there are templates that we provide for stock scans, and one of the templates is this earnings liquid fairly valued. So what this is saying is, I want to find stocks with earnings coming up that is liquid, and then that's not like kind of crazy over or crazy undervalued, just something to get a list of stocks into the option scanner so I could see if there are any trades in the option scanner that match what I'm looking for. And I'm going to be, we'll be doing that double calendar, where you do a call calendar and a put calendar simultaneously. So far so good, Tyler?
Yeah, we definitely get asked about the calendar, so I'm curious to see how you set that up, and it's a good strategy for earnings trades too. So this will be something that we'll see in the live use cases as well.
Right. So what I like to do is do the following settings. So clearly, when you're at earnings, you want weeks to next earnings either less than or equal to 0, or maybe even 1, right? So then you could get strategies that are less than or equal to 1 week or 0 weeks. So we can look at that. So like service now is one of them, and then this underscore is coming through because the average OIH meets that criteria. So we do the underscore C are component weighted averages. So that's a little bit of a spangle. So earnings and then average earnings move percent. So, there are earnings move percents like over 10%. So I don't want those kind of illiquid stocks trading, my calendar, right? So the calendar, you want to go to a certain level, and we'll look at what that looks like. And you don't want it going past there, but you want to have some earnings move. So the average earnings move, it takes the and we could look at that in the earnings for one of the stocks that we like, Tyler. But the average earn move percent is the last 12 earnings moves after earnings are announced, and average those.
Yeah, that's a pretty interesting indicator. Cool to see that one in here.
Yeah. And then the implied earnings move is also in here, and it's between 3 and 8. So it's, when I say fairly valued, everything's going to be kind of between 3 and 8%. And then that ratio is between 80% and 120%. So, and then we want to sort it by that average. So or actually the forecast earnings percent divided by implied. So the way the stock scanner integrates with the option scanner is only 25 top by the scan that you put in here and sort, the top 25 will come out. And that's because we go do a very in-depth scan, and you'll see that in the option scanner when we go to that next. So, so now that we have this scan set up, and then I should mention other things. I want a minimum stock price of 20 because I'm going to be doing these calendars. You want enough strikes. The implied volatility just kind of between 10 and 100. Average option volume for all. This is a nice liquidity because it looks at all trades in a particular symbol and the minimum of 1,000 we want. So we'll take those forward to the option scanner. And then, so the option scanner, so now we're over, in the option scan templates. And you can see that, so these are the templates in the option scan. You can see that earnings liquid fairly valued is here. Now, I should also mention, if you're using a template and you save it, a different one, you should save it by a different name, and then you could also bring that in. So I'm going to click on the double diagonals, and here are the stocks that it's bringing in. So it's bringing in the top 25. And then we're doing a double calendar for earnings. So you could set this up a variety of ways, and we should go into how to set that up. So first of all, you add a custom strategy, and in this case, I wanted the calls and puts separate. And what that will do is that will make this is really a double diagonal. So if you want a double calendar, then you need to have adjacent legs next to each other. So for example, a call, and put. So I'll be buying a call, selling a call, buying a put, selling a put. So let's just add that, and we'll see how this is different. This is going to be a true calendar. All right, so that's the name of this one. So we want to make it short term. So the call that we buy, we want maybe, let's just say in that case, we'll keep it the same, 44, and we'll go 33 to 99 since I'm lazy. So the front month will be still 2 between 1 and 7, so that's 1 week. The long put will be the same as 33 and 99, and then the short will be, actually, the way that we should have done this so we can make it the same. Anyway, we could do that later, but 2, 1, 7. So most likely, Tyler, what you would want in this is to have the short with the short, if you want that in this, if you want to match up where these, the expirations where these are. Does that make sense?
Yeah, you have to choose to match up only one side, right? I
Right.
don't think it's possible to match up both sides.
That's true, because we only look at adjacent ones.
Yeah.
So here are the strike deltas. So these are very far out of the money. These are 12. So we could go down, 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 and then probably tighter, tighter, tighter. Maybe we should go up and then make them tighter. Wait, I'm making them wider. Tighter, 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 tighter. Maybe I'll stop. How wide are these? Yeah, 20 points wide, 15 points wide.
Matt, while you're doing that, we did get a question on the comments is asking why we need the target when we have the min and max already.
Because there's a min and max, but the target will, like, if there are more than a certain amount, I can't remember how many per stock come through, it will narrow those down towards the target. So you want to set your target. Okay, so the spread divided by stock, that's just the price that you want to pay. I don't have anything in the original for that. So now that this is the important things down here. So you could set how wide the markets are. There's some really nice settings down here, but we'll get into those later. The big thing here is the DTE diffs. So what are the DTE diffs? That's how wide you want it to be. So right now it's 0, so you're not going to get any. So that's why we're not seeing any true double calendars right now, because these, it's set for leg 1. It's leg 1 minus leg 2, leg 2 minus leg 3, leg 3 minus leg 4. Those are the settings for the leg relationships. So this is going to be, we want a minimum of, say, 20 and a maximum of say 50 is between leg 1 and leg 2, right? So it's this minus that. So let's go set that.
Same with legs 3 and 4 as well, right?
Well, yeah. So 20 to 50 is the difference. Legs 2 and 3, we don't really need to set those. If we wanted to, we could, but we don't. But it's just, you're right. It's the same thing for legs 3 and 4. But when I don't know, I just say -999 and 999, because otherwise the default is 0, the 20 to 50.
So what you're doing here is you're explicitly telling it to have a difference in the days, and that's what makes it a calendar. We want at least 20 days difference between the legs.
Right, and then same with the the calls. Do we want those to be exact? So the answer is yes, but the call and the put we don't want to be exact. So this is one of the problems that one of our people had. Like between 2 and 3 need to be non-zero for the strike difference. Now we're now onto the strike difference. So we want 0 here. So I'll just make it explicit, 0 and 0, because we want a true calendar. But then we don't care on the calls and puts. And then we care about the differences between the, we want those to be the same. So let's see if I did this right. It's difficult, and I'm going to take this out. Okay, no scan results. So
let's go back up to the
So the call, should be getting those, right? And the deltas, maybe I'll make this a little bit wide. I'll put this in between.
I bet it's the leg relationships.
Yeah, probably, but I just want to this is what you do when you don't find anything. You start widening things out. So none of those, right? So leg 1 minus leg 2, 20 to 50. Yeah. Actually, another thing to do is just to make them all negative 999 to 999 and see where the constraint was. Oh, there they are now. Okay, so the constraint was in the leg relationships, right?
Yeah, for the DTEs.
So the strike width is good, right? So we know the strike width is good, but we had the DTE diff incorrect. Yeah, leg 1 DTE minus leg 2 DTE. So
I think the max has to be a little larger because the I think it looked like there was quite a few days between.
Okay, so let's make the min, like
I'd say the min at 20 was fine, but the max.
Let's just go wide there and see if that works. So it's trades that we're only getting 4. I think it might be we need a wider delta. Let's just try that to get more.
We also have a reward to risk.
Yeah, I think that was it. The deltas were really tight. There's a reward to risk something.
Well, there's also a delta filter. No, on the
over here. Yeah, you're right. Okay, that's a good point. All right, these should be. Yeah, let's just take those out. You're right. The reward to risk could be 1, and then so I
think it's probably the delta.
Yeah. Okay. Okay. So that's probably it. Good catch. Because I have, usually when you start afresh, you won't have those types of things. So.
Oh yeah, there we go. 500 trades. Yeah, now I think we can start tightening the parameters now that we know.
Yeah. So okay. So now this is again. This is live TV, as we call it. So we're doing this live for you. So these are the steps that I go through, or tighten it this way.
So we're getting a question about if we have a reset link for the filters. We don't, but that is a very good thing.
We could clear all these. I know. I'm after that.
Yeah.
So that's a good one.
I'll put that in there.
All right. So thanks for asking that, because that's something that. Okay. So let's go back to DTE diff. So we want, let's just say at least 20 days and not more than 50 days. So now we're down to 73 trades. And okay, so now we could start doing now these look kind of good, right? So we can now, like that, let's just look at this. Now we want to set the S percent. I always like to set that. Why do I want to set the S percent? It's 27. It's huge edge, right? So let's just see the problem with this. The problem with expecting to pay 153 is these markets are extremely wide. $4.65 at 785. So we do not even want to consider this trade. So let's think of a couple ways that we could get rid of it. One is we could set the maximum bid-ask spread. Right now the bid-ask spread $5, Tyler, or 5%, $12. How are you doing? Not good. You don't want to ever pay that much. So the most you want to pay maybe is let's just say $1, because it's pretty wide. So now we're down to 19 trades. And usually you want to set market width in percentage terms. So maybe we'll have it, like 2% wide. Now we're down to 17 trades as a percent of price.
I would also maybe set a volume filter on there.
Well, they have to trade. I agree, but the problem is like some of these legs, they won't trade that much, but some of them do. So, like we could try to get filled. I'll try to get filled on one of these.
So I did notice each leg is a different expiration.
Yeah, that isn't always the case, but it can be the case. So this is the point, Tyler, is you can't always get what you want. But like let's just say if we want the front month to be the same, then we need to do something else, right? So then we need to order these differently. which is a good thing to do anyway.
Well,
So
let's demo it. I mean, if in case someone wants that.
What do you mean? Let's demo it.
Well, as you're doing right now, I was saying if we can show it.
Yeah. So double calendar, shorts match, right?
Yeah.
We don't care about the other one. So let's do. So now we're going to do the long call again. Is 44, 20, 99, right? Short call 2, 1. We can make this 7. We only went for a month. 40. But now this isn't right. So now the put wants to match the other one. Actually, let's do it for.
This will be right. The shorts will match because we'll put the short put at 2-1-14 and then or 2-1-7.
44. So the longs won't match because we don't have a way to match those.
Right. But if you wanted to do a longs match one, we would just flip the order, right?
Yeah. But you could only match one.
Right.
So we might want a little bit wider than 10. So let's do, this is 20 deltas wide. Let's go down. So 15 delta, I like this. Okay. And then we'll go, now we have to remember like our DTE diff for 1 and 2 is still 0, right?
Mm-hmm.
As a matter of fact, no, it's not 0. Now it's going to be negative, right? Because it's leg 1. Wait, no, sorry. Positive. So we'll say 20 to 40. That's the same, right? 20 to 50, right? But the legs 2 and 3 are going to be 0, right? Because we want those to be the same expiration. That's why we're doing it.
Yeah.
Because you notice that they weren't. And then now 3 minus 4, so it's 3 minus 4, so that's going to be negative. 2 minus 44. So now it's going to be flipped, right? So negative 50 to negative 20 is the max. You good on that?
Yeah, I think that makes sense. I was just thinking, I think you can have both if you put the 2 shorts on the top and the 2 longs on the bottom. Try it.
Well, no, because then you're going to leg 4. How are you going to match leg 4 with? You can't. That's a put in a call 3 and 4. Trust me.
All right.
Or wait, is that true? But then you can't get a calendar. Like we want to keep the count. Actually, we're not going to be able to get the calendar with this, right? No, we'll be able to get the calendar. We won't get the. It won't match. The strikes won't match. So this will be more now. So we might want to think about putting more leg relationships in. You know what I mean?
Yeah.
But that just gets more complicated. But so anyway, strike width between legs 1 and 2 we want to be 0, right?
Mm-hmm.
Negative 999 and 99 because this is a call versus a put, right?
Mm-hmm.
And we want this to be 0 because it's we want the strikes to be the same for the puts. Yeah. So now we are getting matches now.
Matching shorts on the dates. Is that right?
Well, so here's a double calendar. So we knew that we weren't going to match the longs, but we are matching the shorts, right?
Yep.
And all the strikes match each other, so that's good. And like a tight market, which is nice.
Yeah, that one looks pretty good.
Yeah, and so you could model this with IV changing, and then days going out. So so this one I agree. This looks pretty good. Why don't we paper trade this? So we're in paper trading, and then we could either force it or see if it'll trade. What do you want to do?
Let's force it and we can get a trade in. Yeah, if it's asking if we can save this as a template. One of the comments. We will do that.
Okay, so there's the fill for that. So so I should, in order for me to save this as a template, I need to go back to my scan. Okay, so yeah, we'll make that a template.
Yeah. Cool. Yeah, the calendar it's tricky.
Yeah.
But thanks for showing that, Matt.
Yeah.
Yeah, well that show went by fast. Lots of playing around with the option scanner. Yeah, so if you guys like what you see here and you want to get on the beta, just email us at support@orats.com and I'll put you on the beta. Anything else you wanted to show today, Matt, with the stock or option scanner?
No, I'm just gonna I'll put an alert, and so now you can see it's in our trading it's our trading positions. In a minute it'll review this and know it's a double calendar or a custom or whatever, and then it'll group these together. But yeah, no, I think it's this is a good show. We covered, people ask again, how do I scan for options on all stocks when ORATS limits it to 25? You can see why we limited to 25, because we had at that one, we had 500 options coming in. So, I mean, it's just it's tough to get all that data across and analyze it, because we're doing a lot of calculations on those, like all the D percentages and all the F percentages and everything. So yeah, there's a lot going on. So the way to do it is to go in and really know what types of stocks that you want to trade. There are stocks that have edge in them. Like we looked at edge from a earnings perspective, meaning the implied earnings effect versus the forecast. But you could also look at forecast of volatility. You could look at actual volatility, or whatever you're using to value the implied volatility, for example, or so that's how you narrow down things. So it's a very, I think, effective way to do that, and better in a lot of senses. That's why we've designed it that way. I mean, we could have done all stocks, but when you do that, you realize that, wait, I would never trade that. When you go to the option scanner at ORATS and you see a trade there, and you click on it and you don't want to trade it, you have to say to yourself, why don't I want to trade that? And then create a filter for it, because then you could save it, and you could know that these are the trades that you want, and eventually you could just have those there and just set up your scans and be able to go trade those.
We're basically feeding them to you, right? Like it's you set up the scan and now you're ready to receive the trades. You don't have to do any more manual, filtering yourself.
Right, and then then it goes to the journal, and then you can monitor those by strategy. So I mean, that's a really cool thing. All right, Tyler, I think we're out of time, but yeah, I really appreciate it. Nice show today.
Yeah, good job, Matt. If you guys have any questions, like the guy in our comments did today, just make sure to write them in the comments and we'll answer them. We'll answer them on the live show as well. You can also ask them in the community tab on the dashboards. That's a great place to connect with other traders and get ideas on strategies and trade ideas and stuff like that. If you guys have any other questions, just reach out to us at support@orats.com. We'll be back again next week. Thank you, Trader, for hosting us, and thank you, Matt.
Thanks, Tyler.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.